What's going on, everyone? Welcome back to part 7 of this futures trading accelerator course. So in today's video, I just want to talk about the 4 different futures contracts that I trade and just a little bit of information about them, what the point multiplier is, what times they're traded, how to trade them. So just all that kind of stuff just to get you guys a little bit primed into just how to trade them and the only ones that I trade currently. So those 4 are ES, NQ, GC, and CL, or S&P 500, NASDAQ, gold, and oil. So let's just start by writing out the ticker symbol for all of these. So for the S&P 500 futures, it would be ES. Let's do that. Then we got NQ. Then we got, let's do gold, GC. And then let's do oil, CL. Boom. So, ES, NQ, GC, CL. So, first of all, let's just discuss how the point system works for futures trading. So in futures, for every point, there is a certain dollar amount that is in correlation to that point. So for NASDAQ, let's go to a bigger chart actually, and then let's do NASDAQ. So for NASDAQ, let's go to the smallest points that we can. Stay with me here. So right here. So you see how it's 14,762, 14,763, 64, 65, 66. So each of that little number change, and keep in mind this would be the exact same with ES. It would be the same with, it'd be the same with all of them. It's just, the point difference gets way higher when you start talking about like oil and stuff. But so basically 14,762, let's say you bought right here at 762, goes up to 763. That's 1 point. That would be equivalent to $20 if you just took one E-mini NASDAQ contract. So of course, if you caught 6 points, so bought here 14,762 and sold here 14,768, that would be a total of 6 points. 6 points times 20 equals 120 net profit to you minus commissions. So that's how it works for NASDAQ. So for NASDAQ, the point multiplier is 20. And actually, I'm going to go rewrite that too because that is embarrassing. So 20 is the point multiplier. Now for ES, it's the same thing. I'm actually going to go through all these just to make sure you guys know exactly what it is. So ES, same thing. So each point would be a change from 16 to 17 to 18 to 19 to 20. So in futures, it's a lot easier to just talk about, the 17, 16, oh, I bought at 16, sold at 20, or bought at 316, sold at 320, than having to say 4,320 or 14,730. It just takes way too long. So, I bought at 15, sold at 20. It's so much quicker. So for ES and NQ, that's what I'm going to be saying. So let's say you bought at 15, sold at 16. That would be $50 of profit to you. And if you bought at 15, sold at 20, that would be $50, which is the point multiplier times 5 points on one ES E-mini contract, which would be a grand total of $250. So for ES, the point multiplier is 50. Now for gold, let's go to gold really quick. So gold is basically the same thing as ES. It's not 4,000. It's basically 2,000 is right around the highest that it's ever gotten. But of course, the points, that whole system basically works the exact same. For gold, the point multiplier is 100. So if you bought at 95 and sold at 96, that would be $100 of profit. So yeah, $100 in profit. Now gold doesn't really move too drastically on most days. I mean, in my opinion, like, I love to just trade ES and NQ. Gold and oil, there will be some days that's really, really good to trade them, but the thing is catching a move on gold and oil versus ES and NQ, it's basically the same thing. Like, you don't need to freak out if there's multiple setups on these four names. You don't need to freak out, because if you just have to catch one. Like, it doesn't matter if there's two long setups on, if there's a long setup on oil and a long setup on NASDAQ. Just take one and you're good. They basically move just about the same, and you just don't have to fret about missing a move on either one. So got a little bit sidetracked there, but just wanted to let you guys know, just don't freak out trying to catch moves on all different ones. Just focus on one, because remember, if you chase two rabbits, you'll catch none. So just focus on one and you'll get that trade set up. So yeah, that's for gold. 100 points, or $100 per 1 point. So pretty straightforward there. And you can just see the price action, the volume is a lot lower than something like ES, and it just doesn't move as much. And just an easy thing right here, if you sold at 1910, covered at 1900, that would be 10 points if you went short. So, you know, you're betting that the price is going to go down, and that's 10 points on one contract. 10 points times $100 equals $1,000. So technically, if you got short around 9 o'clock, covered 2 hours later, you could have made about $500 an hour when you were in that trade. So not terrible. But for gold, $100 is the point multiplier. Now for oil, let's go to oil. Oil is a little bit different than the rest. That is just because it's not, you know, a 4 or 5 figure number. It is just 2 figures. Or 3. The highest it's ever gone is 3, like in the hundreds. But yeah, so like right there, like 130, 60, 80. So the thing about oil is the point multiplier is super high, because 1 point on, on something that's worth $90, or something that's trading at $90, if it goes to 91, it can't be just $50 or $20, because there would just be not a lot of profit there. It would have to have way more. It would have to move way more. That's why NASDAQ, that is the highest number, or what it trades at, that's why it moves. That's why NASDAQ is so volatile, because the point multiplier is a lot smaller. And if NASDAQ moves 100 points in a day, which is nothing, that's $2,000 just, going up and down. Whereas with oil, this entire day today, it had to fight to be able to go 2 points versus 100 points. And you can see here, this was a massive day for oil. An average day for oil is like maybe a point or two. So the thing about oil, though, is since it's so cheap, the multiplier is extremely high. And that multiplier is $1,000 per point. That is the point multiplier for oil. So if you got long at 92 and sold at 93, that's $1,000 in basically around 2 hours. That's basically the exact same as gold if you went short on gold. So do you see kind of what I'm saying, where you don't need to, it's basically two different categories, right? So you have the indices, ES and Q, and you have gold and oil, which are the commodities, and they're two baskets. Look for a trade on either one, but then pick in that basket, pick one of those names. If you're trying to go long on ES and NQ, don't do that. Just trade one. Just trade one basket or the other, or both, but only one name in each basket. Indices, commodities. You should only be having one position max. Technically one position at a time, but if you want, one position max in each basket. So, with that being said, so of course, right, $92 got long, sold 93, that would be $1,000 in 2 hours, right? Shorted at 94, goes down 93, again, $1,000. Now, let's talk about what each value is for a tick. So on ES, remember the lowest tick, or the lowest increment of difference that it can trade at is, let's go to a really, really small example here. So 0.25, 0.5, 0.75, or double zeros. And so each one of those, so that's 4 different prices that it can trade at. So the tick, or let's do this way bigger and just write T. So tick equals $12.50. So if you have 4 ticks, which is equal to 1 point, then each tick would be worth $12.50 for one contract. And keep in mind, this is going to be for all of these. This is just one contract. All of these, multiply it by how many contracts you have and then how many points. That's how you would determine your profit and loss super, super easily. NASDAQ, same thing. Let's go to NASDAQ. Let's try to go to the, or actually let's just do this, active trader. So on NASDAQ, the lowest that it can go is 0.500, 0.500, 0.500. So on NASDAQ, it's the same thing. Double zeros, 0.25, 0.5, 0.75, double zeros. So what would that be? That means that each tick value would be worth, since there's 4 ticks in 1 point, same thing as ES, $5 per tick on NASDAQ. Now let's go to gold. Gold, 1983, or 1893, scroll up, 1894. So there is 1, 2, 3, 4, 5, 6, 7, 8, 9, basically 10. So each tick for gold, which is the smallest increment that it can trade at, or, you know, go up or down in, would be equal to $10. So if you bought at 1893 with one E-mini contract, sold at 1893.1, that would be a profit of $10. Now let's go to oil. Oil, remember, because it's so low, the point multiplier is so high, and since it's so cheap, you have way more ticks. So let's go down to 93. It's going to be a while. 93.01, 02, right? Follow this. So do you see how there's basically 100.01? So take 1,000 divided by 100, because there's 100 ticks, right? Just scroll down. If you count up all those, that is 100. So what is 1,000 divided by 100? $10, right? So each tick would be worth $10. And you can check that. So $93, let's say you bought here, sold 93.1, that would be a profit of $100. So that is for tick values. Now let's talk about what times you can trade all of these. So, of course, for all of these, the time that's the best to trade these starts at 9:30, which is when the market opens. And that is basically only when you should be trading these. Please, especially if you're starting out, do not trade these in after hours. There's absolutely no point in doing that. You are not going to have great success if you try to trade in after hours. The moves are just not regular, and they're super, super irregular, and they are just not good moves. Trust me, guys. Price barely follows any sort of structure in the after hours. The volume is so light. Please, from 9:30 to basically around 11:12 is the best time to trade on all of these. Now let's talk about delivery months. So a delivery month is basically when each contract will be settled and expired in. So for ES, NQ, and gold, the only expirations or delivery months is H, M, U, and Z. So March, June, September, and December. Currently, as of recording this, we are on the Z contract, which is the front month of December. So, of course, that is the same for NASDAQ and for gold. Now, a site that I do love to just use a little bit is this one site. Let me try to move my camera really quickly. So right here, danielstrading.com/trading resources/futures calculator. You can just search up futures trading profit calculator, and it'll be one of the first ones that shows up. And you can just plug in your entry price, exit price, number of contracts, and then you can just calculate really, really easily just how much profit or loss you'd be in. And keep in mind, you only really need to do this when you are a beginner. Once you just kind of get the hang of the math and how stuff moves, you'll be able to do it in your head super, super easily. So for oil, all the expiration dates. So for oil, there is a lot more expiration dates or, delivery months. So for oil, it would just take way too long to write it down. Here are all of them. It is all months that, the contract changes. So you'll be updating your contract to trade oil way more often than ES, NQ, and GC. So for oil, January is F, February G, March H, April J, May K, June M, July N, August Q, September U, October V, November X, and December Z. So yeah, there's a lot more. I literally just write C Daniel's trading because there is just way too many to write here. But yeah, that is basically for the delivery months. And again, how you would type in the full futures contract. So let's say that, we wanted to trade now, like the front month now for ES. ES, what is our current expiration front month? Z, 23. Boom. So that's how you would do it for, all the futures. Just the ticker, ES, the contract expiration, Z, or any of, the other ones, and then the year expiration, 23. If you wanted to go to March, it would be H, and 24. That would be the next one. And again, if you do have Thinkorswim, you can just go to the trade tab up here. I know you can't see it. It's literally right next to analyze. And if you need to see which one is active, just type in the futures contract right here. Actually, let me just show you. So just type in the futures contract right here, and then it'll show you which one is active, and you can see which expiration that is, and, you know, et cetera, see which one has the most volume. Whichever one has the most volume is the one that you want to be trading. So I think that is pretty much all that you guys need to know about ES, NQ, GC, and CL. Trying to think right now if there's anything else. I mean, that is basically it. Just need to know, I mean, really just the point multipliers. I mean, everything that I covered on here is easily available on this Daniel's Trading futures profit calculator. You can just review all of that stuff. That's just a really good resource as well, just to quickly calculate stuff. But I think that is basically it. So that is all for today's video. If you guys enjoyed, please just comment, like the video, and subscribe. That would be awesome. Also, if you found any value in today's video, you can go ahead and follow me on TikTok and or Instagram. That will all be in the description below. Thank you guys for watching. Really appreciate you guys. And see you guys in the next one. Peace.